This is Movers and Shakers, where we interview the upcoming generation of make it happen multifamily investors to share their story.
Hello, everybody. My name is Gino, one of the co-hosts of the Movers and Shakers podcast, multifamily investor, educator, father, mentor, and I'm here with my brosif, Joshua Ryan Rusin. Josh, how you doing, bro?
Gino, doing well here today. Super excited about some upcoming activities we got for the Jake and Gino family. You know, in June, the 22nd and 23rd, we got the Buy Right Boot Camp, which actually Gwyeth is going to be joining us at. And then in July, we actually have a multifamily money mixer. Gino, you want to tell the folks a little bit about these events?
Well, the 22nd and 23rd, we created this Buy Right Boot Camp. And what we're going to do there, it's all about deal analysis. It's all about how to underwrite a deal. It's about market cycles. It's about debt restructuring. And more importantly, Josh, it's about getting the community together. Real estate is all about networking. And, you know, our guest today, Gwyeth, I saw him last week at a meetup. He's going to a meetup this week. I'm going to see him June 4th. So it's all about getting out there, getting your name out there, raising money, giving people awareness of what you're doing, creating your own environment, creating the identity that you want to be a multifamily investor. That's all important. That's why these boot camps are vital. Nothing but positive feedback from them. And the Money Mixer is just an event that we're going to have in Knoxville on July 5th. It's an amazing event. You want to jet ski, you want to have fun, you want to go out and tour a couple of properties, you want to meet Jim Clayton, you want to meet the whole Jake and Gino crew. It's going to be a lot of fun out there. So we're creating these events just to give our students and our community that environment to thrive and to say, hey, you're not on an island all by yourself, a multifamily, because as you start scaling your business, Gwyeth will probably be the best one to tell you in the podcast, you're not on an island. You need to start networking and start growing your community.
Wow. Gino, I'm excited. And actually that segues perfectly into our guest today, Gwyeth. A little bit about Gwyeth here. So he has a bachelor's of science in economics from James Madison University. After graduation, Gwyeth worked at old Rockefeller Company, performing domestic and international cost of living analysis. He then transitioned into investing and worked as a proprietary equity trader for multiple New York-based companies. At this time, Gwyeth began to explore alternative investments to Wall Street. He turned his NYC apartment into an asset by renting it and moving to AZ, Arizona, to be with his future wife. There, he found another passion, helping people with limb loss. He followed a path where he became a certified prosthetist, and in 10 years has helped countless amputees achieve feats that few able-bodied people could even imagine. Gwyeth's career in prosthetics didn't stop his passion for investing, and today his multifamily portfolio includes over 750 units. Wow. Welcome to the show today, Gwyeth.
Thanks for having me.
So Gwyeth, you know, I got to hear it, right? You have a career, you've been doing very well. You got into school, you started exploring the traditional investments. When and why did real estate come onto the scene? And then when did you think to rent out your own apartment?
So renting out the apartment was, more happenstance than anything else. That was back in 2006, and I was still working as an equities trader. And, living in the city, I was renting. I had some money saved up, so I decided I wanted to buy. And then, as fate would have it, I started dating my girlfriend at the time, who we ultimately got married. But, we made the deal that I would move out to Arizona to be with her for a year, and then we'd sort of hopscotch back east. She's originally from Pittsburgh. I'm from New York. And we didn't know where we ultimately want to end up, but we knew that we weren't West Coast people. So, I went out there, I rented out the apartment, and I held it for 5 years, probably in the worst time of it all. But, I sold it for pretty much break even. That whole story is a story in itself, but, we'll save that for another time. And, when we were out in Arizona is where I decided to have a career change, and it threw everybody for a loop. I knew I didn't want to trade anymore. It was more of a mentality thing than anything else. I would, as an equities trader, your days are kind of in front of the computer, making trades on an intraday basis. On days that I made money, I would be looking at my, what I had done, and I'd be upset that I didn't make more because I missed this trade, or I got out of this one too early, or I just didn't optimize it. And on days that I lost money, I was upset as well. So I realized I was always upset. So I decided there needs to be a change.
Wow, that's awesome. That sounds like my restaurant career. On days that we made money, it's like, man, I wish we made more. And on days that it snowed, I'm like, dude, where's the gun? Can I please shoot myself today? Because it's like the most miserable feeling. So You're an equity trader. I mean, it's more transaction based. How did you make that shift to get into multifamily, where multifamily is more of a long game, and it's more of, I don't want to call it passive income because it's not. It's really active in the beginning. But how did you make that mind shift, and why multifamily for you?
Yeah, that's a great question. And equities trading is very short term, and equity traders on a day trading basis are notoriously bad long-term investors. So there was a gap, and that's where the prosthetics came into play. And I didn't really transition into multifamily right away. I had that 10 years of doing something else and working for someone else and earning a W-2 income. And it was during that time where I had the realization that I wanted to control my own destiny. I wanted to be responsible for my future. I started to do some personal growth type stuff, read some personal growth books, and started to understand that, or I should say, trying to deviate from that herd mentality. And then I started looking into ways that I could optimize certain investments. I started looking into alternative investments, and, rental properties was kind of high on my list. And my wife being from Pittsburgh, we looked into that market, and we bought a duplex in 2016. And then in 17, we bought a fourplex, and we let those two run a little bit just to prove the concept and, show cash flow and show that we were able to do this. And that led us to the 13-unit property last September. So it kind of was a natural organic growth, if you will.
So Gwyeth, let's go back a few steps. What did your wife say first when you told her, I'm going into another career? And then what did she say when I'm going to start buying multifamily? Because I'll share my story with you, but I want to hear yours first.
Well, it's probably a good question to ask her, but pretty much, I said, who are you? Where did this come from? Do I know you? And at this point, I mean, we're engaged, getting married. And I think she actually called my parents, and my parents had a private conversation like, is Gwyeth okay? Where did this come from? This is out of the blue. He hadn't been talking about this. He just did it. So yeah, she should probably be the one to answer that a little bit better than me.
And then what happened about multifamily? Was it an easier transition into the multifamily space?
So I've been talking about that for more time than the transition to prosthetics. So,
Mm-hmm.
She had known I was looking at certain investments. She's known that I've always been an investor at heart. In addition to multifamily and equities and all that stuff, I've always kind of dabbled in different sort of investments. So I wouldn't say that she was a willing participant in the beginning.
Mm-hmm.
There was definitely a lot of conversations that needed to be had, and to get her on board, it wasn't totally seamless. But once she started to see how we were doing and started to see the proof of concept, then it became a lot easier. And when we look at certain opportunities, she would say, well, can we put more into that one? Which was shocking, because she'll tell you she's the most conservative investor there is. And that's almost a pet peeve of mine, because when I go to people and I present opportunities for, say, syndication or whatever it may be, and everybody seems to think I have such a high risk tolerance, and I look and I say, well, I don't. It's an investment that I understand, that I can see. There's a business plan, and for me, that's not high risk.
Mm-hmm. I want to, I guess, direct my comments now to anyone who is in equity trading, or I think one of the problems with that space is it's not conducive to family life. I think you've got to go out a lot. I think you've got to go entertain people. I think it's really high stress. I think it's high over the market. I've known people, my wife has a cousin who retired at 40 years old, and he's been retired for 7 or 8 years because I think he's completely burned out. So it's a very difficult transactional thing. And with multifamily, it's not transaction, it's equity. You're building equity, you're building a business. And Gwyeth, I share with you, and I told my wife that I wanted to go into multifamily full time. She had seen the pain that I was in the restaurant. So she said, okay, you bought a couple of deals before, we'll see what happens. Unfortunately, the first couple of deals that I bought, I lost money. But she had faith in me, and she saw that I actually went and got educated. And it was, okay, the real estate coach, putting money into my education, learning about it, and then taking baby steps like you, doing that proof of concept, and just keep sticking at it. It didn't work overnight. It took a long time for me to figure out how to do multifamily, because there's so many different facets of it. And that's where I want to segue into you. When you joined Jake and Gino, did you even know about syndication? Were you thinking about syndication at that point?
Yeah, so I knew the model. I had done a lot of research, and to be honest, I had thought that syndication was going to be the route I was going to pursue.
Mm-hmm.
And when I had joined Jake and Gino, and Josh can attest to this. I mean, I don't want to get off topic here, but me coming into Jake and Gino had so much to do with the family aspect of it and my wife being on board with everything. So we had a conversation with Josh, and my wife and I are sitting down talking, and Josh is saying, Carolyn, what do you think, your role is going to be in all this? And, at the time, she kind of just gave her answer, and, he kept pushing, if you guys are going to grow a business, how do you see this? And I had to say, well, hang on a second, guys. I was like, I'm not sure if she wants this. We have to, we probably have to have a discussion to see if this is what she wants to do. And I mean, we kind of left it that Carolyn was showing some interest in that conversation. And we went out to dinner a couple nights later, and she decided, yeah, I'm all in, let's do it. And I remember thinking to myself, I'll sign up right here, right now. If you guys get my wife on board, like, let's do this. So, to get back to the origins of this question about knowing syndication, I knew it, but coming into you guys, I was thinking I was going to pursue more the refi and roll strategy at first. But then, my first few calls with Dylan, and, Dylan obviously has been successful in syndicating. And I felt that Dylan was coming into Jake and Gino, to kind of, not to run, but to be a big part of the syndication aspect of it all. And, it kind of, for me is like, if that's Dylan's passion and that's who's going to be coaching me, that's what I want to learn. I don't want to learn how to catch a football from Aaron Rodgers. I want to learn how to throw a football from him. So, my whole path shifted a little bit. So, I hope that answers your question.
It does, and that's the important thing. I didn't know what syndication was 2 years ago myself. So I got educated on it. I listened to podcasts, and I podcasted a lot of syndicators. So why do you think it shifted? I mean, because we didn't start syndicating until later on. You had the 13 unit. How's the 13 unit going? And how did you even start syndication? How did you even start raising money for your first deal? Where did you find your first deal? It's such a big question to unpack.
Yeah. So going back to what you were saying about networking, I was at an event, and even to go a little bit earlier than that, I had passively invested in 2 syndications as a limited partner. And both of those investments were in a Dallas-Fort Worth submarket. I had researched the market. I had researched the deal. I was comfortable investing into it, and I did. And those 2 investments, they were only a few months apart. So, I mean, I was pretty new into it. And, they were going on. I was watching how the business plan was being implemented. We were getting updates each month. We were getting the financials each quarter. So you would see the rent roll, you would see the operating statements and everything. So I knew what they were achieving next to the business plan. And then I'm at a real estate conference. I met a couple, not a couple in terms of like husband, wife, but 2 partners in a business, and they had a property under contract that they were going to be syndicating. And it was directly across the street from one that I was a limited partner in. So at this point, I think I had a few phone calls with Dylan. I kind of decided that, hey, this is his forte. So this is how, this is what I want to learn from him. If this is going to be my, the person that's taking my phone calls and everything. So now, there was a deal that I was familiar with the submarket, familiar with the business plan of the ones I was limited partner in. My one biggest concern was that I didn't know the people other than just meeting them. So, we started having conversations. We started talking. They had recently closed another property that was, I think, 200, like in the low 200s unit count. And they had closed another one the previous year in the mid 100s unit count. And they had pretty much gone through their network on equity raising. So they had raised over $5.5 million on those projects. So they were looking for some help raising money on this one. I was straight up and I said, I've never done equity raising before, but in kind of looking at my situation, I felt that was an area that I could be of value. So I live on Long Island. We don't have a ton of deals around us, but we do have equity. There's money around here. I work full time. I have 4 kids, so time is my biggest constraint. I know I can't do everything myself. I know I can't, be the deal operator, be the underwriter, bring everything together and raise money. So I looked where I could do something, and that was, it. I wasn't ready for it, but I jumped in with 2 feet. And for the most part, there was a lot of learning on the fly. It was learning the deal, like the back of your hand, being able to present it to people, being able to answer all questions, being able to look at where the risks are in the deal, as well as where the opportunities are, to be completely transparent about both. And, at that point, we were building the website. We're trying to put out some content. We're signed up with Active Campaign. We're learning that one on the fly. We're putting out a campaign for the property itself. And for the most part, I started raising money.
This is awesome. So everybody out there who's listening, what did Gwyeth do? He committed, and then he figured it out. That's the most important thing in life. I had another show with someone else yesterday who's got hundreds of millions of dollars of deals. He started the same way. He just committed to real estate. He committed to his model, and then you figure it out. The coaching has also been pretty powerful. I think the accountability piece, where you can go back and ask your coach, how do I do this? How do I pivot? How do I send out a webinar? How do I create a webinar? How do I make the presentation? How do I underwrite this deal? On the deal itself, why did you like this deal? What was really stood out in this deal for you?
Well, again, it goes back to kind of proof of concept from the 2 limited partnership deals. But one thing that I really liked is that there were multiple exit strategies. So, you're coming in with a bridge loan and being able to refinance into long-term debt. Now, I know where we're at the market cycle. The bridge loan is a risky proposition. And that is something I told, potential investors, is that, that might be the riskiest part. But it was 3 years with the option to buy 2. It's a 5-year project. The first exit strategy was to refinance in 12 to 18 months into long-term debt. Second exit strategy, if that wasn't to happen, would be to sell and exit directly from the bridge loan. There's a lot of value add to the play or to the property. I would say first and foremost is that in all the properties in this submarket, I shouldn't say all, most, they incorporate RUBS, they build back utilities. This one doesn't. It's all landlord paid. So, your number one opportunity there is to start billing back utilities. That alone in this project would increase the value of the property by over $2 million. Also, on a rent per square foot, this was below market. It was below the other 2 I was invested in. The amenities, weren't comparable to other properties that are right next door and around this property. So there was opportunity to improve amenities, to push rents, to build back utilities. So with all that said, the one thing that I really liked is that these operators, they were looking for the next buyer. So they weren't going to do everything. Their business plan entailed, doing partial RUBS, doing partial renovations, pushing the rents, conservative underwriting, and looking at that next buyer and leaving meat on the bone for him. So we're not, limiting our buyer pool on the back end of this project. So there was a lot of things like that I really liked. It was the conservative estimates that were a part of the underwriting. For instance, it was being purchased at a low 5 cap. It was like 5.3. The reversion cap rate that they underwrote at was 7.5. If you look at the sensitivity analysis, I think 7.5 is pretty conservative. And I know again that we're at part of the market cycle where you have to underwrite like that. Mm-hmm. But I feel this submarket is one that might withstand a downturn a little bit better than others.
I love that. So let me ask you one last question from me. Anyone trying to get into multifamily real estate, what is a couple tips that you would give to them to say, hey, this is what you need to do to become successful in this business?
I think first and foremost is education. It's having somebody to push you. It's having teammates. I think, like I said before, doing it on your own is tough. If you have all the time in the world or if you don't, I think people work off each other. Sometimes not the best, but I think most times really well. So, I may have certain insights or I may be a certain way and somebody may have a different insight that I missed. And, when you talk to that person, whether it's on a phone call or in person or whatever it may be, it's, it's growth. When I was looking at the underwriting on this property, there was something I didn't consider, and I was talking to somebody else about it in our group here. And, he asked me a question that I didn't know the answer to. And it was about, I'm not going to remember now, but it had to do with the economic vacancy and how that was calculated. And I said, you know what, I'm really not sure. And, he kind of pointed out to me something that I had missed in terms of how I was looking at it. And we didn't know if I missed it, but something I didn't consider.
Mm-hmm.
And, I went back to the operators and I asked how they calculated that number. And, it was done the right way. And not that another way is wrong, but just, there's multiple ways to look at things, and there's multiple ways to underwrite things. And, you don't know everything.
Mm-hmm.
So just having people and increasing your education, learning about it, I always think that's the first thing to do. But then actually getting out and doing it. I mean, you can't, I guess I'll say this: had I not done the money raise for this deal, there's no way I would know the things I know right now, even if I committed to learning a CRM, learning how to create content, learning how to talk to investors. I could have put forth a plan to practice doing that, or say, I'm going to learn how to do that, but there's no way I would have learned it had I not done it.
I love that.
Yeah, that's great. So guys, I got a lot of high level takeaways here. And Gwyeth, I really want to focus on you. I know that successful people take action and they realize all the lights in town never turn green. For you, what is it that allowed you to push past some of that fear and realizing you don't know it all and take action anyways?
Sometimes you got to jump in with both feet. It's, that's a good question. I mean, I know what I want. I ultimately know what I want my end goal to be. So I think that goes back to some of the personal growth stuff and just having some clarity and being clear on what you want and what you want to achieve, and kind of creating a roadmap. And that roadmap's going to change here and there. I mean, it did for me. But knowing that you want to be at a certain place, and I want to be in the place where, I get to go to all my kids' games. I don't want to have to travel separately for Thanksgiving because I can't get, one extra day off, or, come home early from spring break with my family because I don't have enough days. Having to ask permission to take a day today because I want to do a career day for my second grader. These are the things that I want to control, and I don't want to ask permission for.
That's good. So you had a clear and strong defined why. So that's a really good takeaway for the listeners. Another point I distilled out of this podcast is getting Carolyn on the same page as you. You realize the importance of that. I guess for the listeners who want to get into multifamily and they're concerned their spouse may be a little scared or nervous about this venture, what advice would you have for that person?
Go out to dinner, have a regular date night if it's your spouse, and really kind of go over those whys and those goals. I mean, that's something I don't have the answer to. I give you guys a ton of credit for that. I mean, Josh, I think you remember that first conversation that we had, and the look of surprise on my face when she showed interest, because I had asked her, thousands of times, say, is this something you want to maybe transition to as the kids get a little bit older? And I never saw the response from when you asked it. So maybe that's the answer, is have somebody else ask the question.
I think you said it really well, though. You said have this, be shown as the vehicle to achieve your goals. And they may not be excited about real estate, but they may be excited about the goals like you spoke of, right? The time freedom to be able to spend with your kids and things like that. Lastly, I want to ask, what is your favorite book, Gwyeth? One book that, has been instrumental in your journey?
Go Giver, Bob Berg. Yeah, that's an easy one. I think the principles in that book are just right on. It's a great read. I try to live by it. And, some people who invested into the syndication are, people that I've worked with in the past. And, the one good story or, one good kind of insight I'll tell you is that I did some private lending for a guy in Phoenixville, PA. And, we did a couple projects together. We worked well together. He sent out a thank you at the end of the year and talked about the business, talked about, some of the projects they did. They're very altruistic in nature. and he sent me a cross pen. And I sent just a very heartfelt kind of emails thanking him and saying that, you know, the way that they do business is just the type of people I want to do business with. And, you know, I opt for the person over the deal every single day. And they're just great people to work with, and seemingly great people just in general. So fast forward, you know, a few months, I send out my campaign. He's on it. He calls me up and he tells me the story that he's got some 401k money or solo 401k money that he's looking to, you know, maybe invest. He said he had a conversation with his wife about me. And he said, you know, remember I was telling you about that email that one guy sent us? Well, this is him. And he's just one of those good people. And like, I think we should invest with him. And I said to him, I was like, dude, that's like the nicest thing. You know, like I feel so honored that you're coming in, you know, because of a nice email I wrote you that was based off of a nice pen you sent me with your, you know, about your business. So it just all goes back to that, I think, the go-giver.
Well said. I mean, Gwyeth, you have a great story. You're clearly a massive action taker and a make it happen guy. I'm sure a lot of listeners can relate with you and where you're at, and your results speak for themselves. You know, what I really want to know is, what's the best way for the listeners to get a hold of you?
You can go to the website or email. So our website is www.rustic-capital.com. You'll see our emails on that. Mine is my first name, Gwyeth, which is spelled Gwyeth @rustic-capital.com. You can either click contact us there or invest with us, and you'll be in direct contact.
Guys, what I'm going to encourage you to do is go check out Gwyeth's website. Go get connected with him. I mean, he's a great guy. Follow along in his journey and watch where he's going, because I tell you what, his journey is far from over, and he's got a big why, and he's making it happen. Gino, anything else to add?
Just to wrap it up, I mean, I think Gwyeth came in with one sort of mindset of refining and rolling. Then he pivoted. And I think the most important thing from this podcast is that multifamily, a lot of tools in the toolbox. You can buy your own deals. You can raise capital. You can do day-to-day operations. There are a lot of tools in the toolbox. You can syndicate. So just be open-minded. And most importantly, get out there and get educated and join a community and start networking with other people. And I think ultimately have fun. I mean, I saw him last week. It was awesome. I mean, I'm going to see him next week. It's awesome. It's a lot of fun. Real estate should be fun. I think, you know, that's what we're trying to do. I mean, it's all about connections, and it's all about, you know, meeting people and helping each other out. And I love the book by Bob Berg. It was an awesome book. It's really encapsulates the mindset of what a syndicator should be, creating value and actually asking what investors want and giving that to investors. And the more value you can create, the more successful you're going to be, Josh.
Well said. I mean, I want to thank Gwyeth for being an amazing guest on the show and sharing his movers and shakers story. Guys, if you want to be the next movers and shakers guest, email me, josh@jakeandgino.com. If you like the show, please leave us a review. And until next time, let's make it a movers and shakers week. See you then.
Bye, everybody. Thanks, Gwyeth.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.